Sometimes it matters.
Yields moving as well. We have treasuries up, especially in the front end of the curve, that 2-year up 2.5 basis points. Watching that area. Now we have economic data, the tariff data, how that's going to impact, the treasury's budget and such.
Well, I think what we're hearing, a consensus among some of the conversations that we just had, and I feel like that we've all been having, is that inflation is still a thing. We got that with the Fed minutes. So you can expect that, right? Maybe there's not going to be Fed cuts coming. Maybe they're not going to even leave rates alone. Maybe there could be Fed increases. And so that speaks to a higher rate market, right? And a higher U.S. Treasury curve.
Yeah, I haven't heard anyone say the S word, stagflation, yet.
No, we were go back, I'm trying to think, is it a year? Like there was a point where we were talking about it a lot.
Yeah, and today we got that weaker economic data, but, hotter than expected inflation. You'd think maybe some people will start bringing it up. And then we can say that Emily was the one who...
Emily was the one. All right, we'll give her credit.
That term. All right. Let's take a look at some stocks on the move. I'm Emily Grafeo, jumping ahead of Carol Masser here. And we're joined by Bloomberg News cross-asset reporter Denitsa Sikova. Okay, let's go to retailers.
Yeah, we're talking about uncertainty in the economy, and what a better place to start than Walmart. Walmart had a pretty rough day yesterday, and today it's down about 2%. The ticker, of course, is WMT. The firm forecasted less earnings growth than analysts were expecting. Of course, we know Walmart is always on the conservative sides when it comes to earnings estimates, but still we're seeing some concerns because even HSBC cut their recommendation for the retailer from buy to hold. So clearly analysts are taking this seriously. What is happening is obviously the economy is expanding at a fast pace, but there aren't too many jobs being added. So clearly that K-shaped recovery, or whatever you call it, is definitely weighing on the company. The number everyone is worried about is they expect earnings to rise from $2.75 to $2.85, and the street was actually expecting nearly $3. So pretty big gap that clearly is worrying investors. The stock is up more than 9% year to date. So needless to say, there is just kind of a short-term thing.
It's also been on a tear. I mean, up more than, 70% in 2024, up about 23% last year. Like,
for sure. It's coming from a very strong rally.
Well, and I think a lot of people like what they've been doing, right, in terms of some of the shifts and a lot of stress on digital.
Digital has been a big revenue for them. One of the fastest growing parts of the business, for sure.
All right, I've never ordered anything from Walmart, though. Yeah. But just think, Amazon.
I wouldn't think of it, yeah.
Right?
You said Amazon, but Amazon has actually displaced Walmart as the company with the largest revenue today. So it was Walmart, and now it's Amazon.
But does that include AWS?
I think so.
Yeah. So it's not apples to apples.
It's not
like retail to retail. I've been looking at that story.
It's a big moment.
All right. My understanding is Walmart is still the biggest physical retailer, like physical store retailer.
That makes a lot of sense.
Like there's a distinction, right? All right, Amazon.
Amazon.
I was thinking about, we're going to go somewhere, but I was thinking about your credit world.
Yes.
Have you been talking a lot about Blue Owl?
Yes, that's been the big focus right now. And in fact, it's one of the most read stories on the Bloomberg terminal for today. It might even hit the most read for the week as well, as we're closing out the week. But so much focus here on private credit and what it means for retail getting into private credit. Tell us about Blue Owl stock. This is interesting because we get a public look into how this sector is performing.
Yeah, for sure. BDCs, it's something we've been looking for quite some time. There was the whole conversation about cockroaches, but what we're seeing now is a lot of the funds that kind of appeared in the last few years, the whole exposure to retail. There's like evergreen funds, interval funds. There's just like a slew of vehicles that now allow retail investors to access the space are under pressure, and Blue Owl is the example that is happening this week. The ticker is OWL. The stock is down about 6% now. Year to date, it's down 27%. And it's not only Blue Owl, we have Ares, we have Apollo, we have Blackstone, KKR. All those names in the private credit and private equity space are under a lot of pressure. What happened is there was a decision to restrict withdrawals from one of its private credit funds. And of course, those withdrawals were already quarterly. securely. It's not like this is not an ETF. You cannot just go and withdraw your money. But now there is more and more pressure, and clearly investors are very jittery about down 27% year to date, and everyone has been looking for cracks when it comes to private credit, and fundraising has been really slowing down for private credit. So in terms of what's happening in the future, we're definitely seeing investor worry.
All right, I think we're going to leave it there. Denitza, thank you so much. Bloomberg News cross-asset reporter Denitza Sukova joining us with Stocks on the Move. Check out our 5-minute episodes of Stocks on the Move, biggest winners and losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcast. Right now, Emily Graffeo, we are looking at a market. Yeah, we've been bouncing around a little bit, but we are up across the board, up about 0.5% on the S&P 500. You've got a NASDAQ 100 that's up about 0.7%. And we're going to continue talking tariffs, the economy, and so much more in the next couple of hours.
It's going to be a good show, Carol.
Yeah, actually, we have got the lead plaintiff in the case that the Supreme Court just weighed in when it comes to President Trump's tariffs. So looking forward to that. That tops off our 3 o'clock hour. Coming up next, the close.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
I don't know about you, but I am so ready for the weekend. I thought this could be a little bit of a mellow weekend or mellow Friday, and that is certainly not the case. A very good afternoon, everybody, across Bloomberg platforms. Not Tim Stenivek, he is off today. We have the wonderful Emily Graffeo here in studio in our Bloomberg Interactive Broker Studio. I'm Carol Masser. On a day when so much coming at investors, Supreme Court decision on tariffs, a bunch of economic news, hot inflation print, and yet we've got a market that seems to be taking it in stride.
The stock market is like, oh yeah, this is fine. We're just going to keep buying stocks. If you look at the VIX, which is Wall Street's fear gauge, we like to call it, it's down today. That measures volatility. That measures when investors are getting jittery or excited about something. And yet that gauge is just telling us that all is calm, all is well, perhaps telling us a signal that this equity market is resilient enough to withstand any geopolitical tensions that we get or any tariff uncertainty. That's what it did last year.
Yeah, I think it's a really good point, especially heading into a weekend. So we'll see how we wrap up. We've only got about 59 minutes to go until we wrap up trade for the week and for the day overall. Hey, coming up, though, over the next couple of hours, in fact, in just a minute, we're going to be joined by Sarah Albrecht. She's chair of the Liberty Justice Center. She is the lead, they are the lead plaintiff, I should point out, in that tariff case that the Supreme Court just weighed in on. So looking forward to what she has to say. We're going to talk about all this stuff coming at investors, and then something that I feel like is in your world, the private credit world.
Yes, one of the most read stories today. It's all about what we call business development companies, BDCs, shedding some losses here. We talk about private credit. We talk about maybe what happened today, showing some risks here when investors try to get out of funds that are a little bit more illiquid than your typical ETF or mutual fund.
I feel like we're peeling some layers back. We're also going to talk AI with the Chief Financial Officer of NICE. We're going to get an update on the pursuit of Warner Brothers Discovery. There was a development today. And then the week that was, yes, it was quite a week. And it was a holiday shortened trading week. But we're going to get into the latest on Jeffrey Epstein with our own Jason Leopold of the FOIA files. We had an interesting chat with him yesterday, but we're going to continue as we rack up the week. But we got to get to markets.
Yes. All right, everyone. Sit tight. Let's get a check on today's trade and top.
0.1% today. And we're looking at Bitcoin shares up more than 1%, trading above that 67,000 handle. Taking a look at some of the individual movers, we see Newmont shares falling after the company said it expects to produce less bullion this year, partly due to planned upgrades at some of its managed mines and lower production at two ventures jointly owned with Barrick Mining. And biotech company Grail, GRAL on the ticker, is tumbling more than 50% for its worst day on record. That's after the early cancer detection test maker said its multi-cancer screener failed to meet its primary endpoint of statistically significant reduction in combined stage 3 and 4 cancer. And lastly, Universal Display shares, ticker OLED, is down. They're down for double-digit losses. That's after the semiconductor company's results and outlook were seen as pressured by rising prices for memory chips and component shortages. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. Carol Master along with Emily Grafeo on this Friday. So as you know, the nation's highest court here in the United States struck down President Donald Trump's global tariffs. They voted 6-3. The Supreme Court saying President Trump exceeded his authority by invoking a federal emergency powers law to impose his reciprocal tariffs across the globe, as well as targeted import taxes that the administration says addresses fentanyl trafficking. You saw the president, heard from him earlier, so there is still threats of other tariffs, but it sounds like we're not quite over yet. But it's curious to see what our next guest has to say. We should point out that the legal case all started when an organization brought a case challenging the authority of President Trump to bring those now illegal tariffs, representing several small businesses it said were financially harmed. We're joined now by Sarah Albrecht. She's chair of the Liberty Justice Center and lead plaintiff. She was at the Supreme Court earlier today, joins us now from D.C. Sarah, thank you so much for joining us. The impact of this decision, it certainly feels like a big one, not necessarily totally surprising, but nonetheless, when it came down, it made us all kind of sit up and take note. What do you see as the big impact of this decision?
I think the impact of the decision, one, besides giving relief to every business in this country and providing for the end of tariffs, it reaffirms the separation of powers and our Constitution, and that's what this case was about. It wasn't about tariffs, it was about who has the power to levy tariffs.
And yet we have President Trump now pursuing multiple different options under different laws about that could allow him to potentially introduce new tariffs. How concerned are you about that we would potentially just see a different form of essentially the same type of charge that we saw last year?
Right. I think the big difference is the uncertainty is gone. And so you were talking about the VIX earlier, and I think that's perhaps, stable because they now know the playbook. The playbook is 122, 201, 301, 232. Those are all well-established statutes that provide for tariffs with very strict guidelines and rules that the president has to follow. So now that we know what we're dealing with, I think that gives everybody a lot of relief versus IEEPA, where it was any amount on any country for any reason for any length of time.
So it sounds like, Sarah, that you're not concerned that Congress might come back now and pass similar tariffs.
I mean, I think if they do, it will be very well thought out and justified and with reason and have guardrails. So IEEPA didn't allow for any guardrails. And I think the tariff statutes that exist that have been used for a number of years by almost every president have rules that they have to follow. So if Congress wants to do that, I don't think Congress, well, I'm not going to say what I think Congress is going to do.
Tell us a little bit about the background of how you brought yourself to this case, because I think a lot of listeners might not realize that the decision that the Supreme Court made today was based off of a case that was essentially family-owned businesses versus the president. And so you represented those family-owned businesses. Tell us just about the background a little bit so that we can zoom out and know really what's going on.
Liberty Justice Center is a nonprofit, and our mission is defending the Constitution for all Americans. When President Trump authorized tariffs using the IEEPA statute. It struck us as an abuse of power and did not provide for tariffs. And it seemed very obvious that this was not constitutional. So as a nonprofit, we then went out and searched for plaintiffs that we could represent versus a typical law firm that the plaintiffs would walk in the door. We went out to find the plaintiffs, and we found 5 wonderful family small businesses to represent and really speak for all businesses in the United States. And we filed in the right court, which the Supreme Court also said and affirmed today, the Court of International Trade, and then Federal Circuit, and then today sitting in the Supreme Court was an amazing end to an amazing journey. And I'm so thankful to our team and to Neil Katyal, who argued the case for us, and our clients who, you know, in addition to trying to manage the tariffs and their businesses, then were the named plaintiffs in a very big lawsuit, which comes with a whole other set of challenges.
Yeah, I can only imagine. Hey, one of the things, though, that certainly stood out, and, you know, the president addressed this in a press conference from the White House earlier today, and he talked about the tariff refunds has to be litigated for 2 years. That was his perspective weighing in on this. The Supreme Court did not take that up. They did not decide on how businesses should be refunded and sent it back to the lower courts. How do you plan to pursue that? Because I think it's safe to say it still leaves companies in limbo a little bit as we wait to see what else might come down from the president and whether or not they get these refunds.
Right. And it's not really the court's role to decide how those refunds are implemented. The Supreme Court's role. So if you go back to the Court of International Trade, when we filed and won that case in May of 2025, the ruling came out and they granted us a permanent injunction against the tariffs, saying that they were unconstitutional and that businesses should not be required to pay them and should be required to be refunded. So the government then immediately asked for that injunction to be set aside, which the court granted. And the government's rationale for asking that and why the court agreed to it was the government said we can always just refund the money. So that is in their briefs, that is in writing, and I think they need to stand by that. I think the court will then go back to the permanent injunction, remove the stay, which will allow refunds to go back to small businesses. The CBP also just implemented a automatic refund mechanism, so ACH transfers, which they've never had before, are now automatically. So if you signed up for that program, it should make the whole process a lot simpler. And the fact is, CBP has always issued refunds on all the different tariff statutes, so they know how to do it. It's just doing it.
I just want to, before you go, you know, U.S. Treasury Secretary Scott Bessent weighed in on all of this. We know we heard from the president as well, but here's the Treasury Secretary earlier at the Economic Club of Dallas, just reminding us that, at least from the White House's perspective, this isn't done yet. Unfortunately, he did speak, but there's no audio there.
I believe he said that.
Yeah, but he talked about invoking alternative legal authorities to replace the IEEPA tariffs. He talked about leveraging Section 232, Section 301. I mean, this is something we're all Googling and getting up to speed on. But he said ultimately will result in virtually unchanged tariff revenue this year. So it sounds to me like they still expect to get the proceeds. Just 30 seconds left here. You sound optimistic. Does that change any of your optimism?
I think it does not change my optimism. This was a huge win for small businesses. The IEEPA tariffs, those will be refunded. I think going forward, the government will have to use tariffs in a very methodical, programmed, and deliberate way, which they haven't done before. So while some businesses and industries may be tariffed and countries, I think that just the broad-based nature of it will go away, and that is a huge relief for a lot of businesses, and they can start to plan and you know, keep in mind that all the refund money that goes back to U.S. companies and U.S. consumers and will go back into the economy. So I think that's pretty positive.
Yeah. unless you're watching inflation, which could just push. But that's well, yeah, it's part of our discussion today. Hey, Sarah, thanks so much. I know a big day for you guys, so thank you so much for giving us a few minutes here. Sarah Albrecht, she's chair of the Liberty Justice Center. All right, we want to shift. We're counting down 45 minutes to go until we wrap up the trade, and safe to say it wasn't a complete shock for markets when that Supreme Court ruling came down. But somebody who's been watching every tick today, which included that ruling, but also included a bunch of economic news, is our own Eric Weiner. He's Bloomberg News senior editor, Equities America. He's joining us here in our Bloomberg Interactive Broker studio. As I said, I thought it was going to be all about the inflation print today. What a day. Where to begin? Walk us through a little bit of the day and what really matters. What's kind of stuck in the trade today?
We're stuck. It started out with GDP down and inflation looking sticky, and that isn't great. And we sort of came back from that, and then we were sitting on the desk, and all of a sudden we just heard "ooh," and that was the headline coming of the Supreme Court. I have to say I'm really surprised. Like personally, and this I learn a nice lesson every now and again. Why I don't
that they ruled this way?
No, that I thought the market was going to rip higher when it happened, and I really thought we were going to go quickly over 1% on the S&P, and we just did not. And as things started unfolding, we started talking to people, you could hear why. And that was because there is still, as Sarah just pointed out, there is still so much uncertainty around this. And what was interesting was, so we actually went negative at one point, before he started speaking, the president started speaking. And then he starts talking, and the market starts rallying again. And I mean, you never know exactly why things happen, but the people that we're talking to, the general theory is that they don't really have a plan. Not necessarily that they were caught off guard, but they just don't really have a plan for exactly how to go forward. So
he did say like 10% tariff, I think, starting 3 days from now.
Right.
Could be higher tariffs on, auto tariffs and stuff. So it's a lot of stuff.
There's a lot of stuff, but to Sarah's point, what this takes away is the president by fiat doing a executive order that says, okay, well, now we're going to slam China 30%. That isn't going to happen. And that's really what freaked people out back in April. So that has been taken off of the table. However, the overall market itself, and so you see things like consumer discretionary stocks moving up. You see some of the technology stocks really moving higher. But you don't see this broad-based whoosh up. And that's because there are still a tremendous number of uncertainties underpinning this market. And it's not just tariffs. It's what are we going to do in Iran? What about growth? And all of these uncertainties still manifest themselves. So you don't know exactly how to trade this. It just adds another element.
We're stuck, was exactly what you said.
We are, we're range bound. And that's really it. Like, we're not going above 7,000. We're going to bump up against it a few more times, but something else has to kick us through.
Yeah. I was reading a lot of notes all about the refunds here. I think, so Raphael Bostic, Bank of America, Federal Reserve Bank of Atlanta President Bostic, it's been a long day. So he said that the effect on the economy will depend on whether or not the corporations that paid tariffs, consumers actually get paid back. I think TD Securities also said, we're not going to revise our economic outlook. We just don't know what's going to happen with the refunds. How much did you see? How much was the chatter dependent on all of this hinges on whether people are actually getting paid back or not?
Oh, that's it. Well, actually, that's not all of it, because there is, obviously the market's a forward-looking mechanism, so there's what comes next. But to Kavanaugh's dissent, that was the entire dissent. The dissent was, actually it probably did overstep the laws, but undoing this is going to be such a mess that we shouldn't do that. And that, obviously that didn't carry the day. So, we're looking at laws, but it is a mess, and we don't really know how it's going to end up. The other thing is that the calculations differ, but it was not 100% of what he pledged that got implemented. It's like closer to a quarter, like 25 to 30%. So exactly who got hit, exactly where that went, and exactly who gets paid back really needs to be unwound. And we may not really see exactly where the money is going. It may just sort of funnel and show up, in various different ways. It's not like there's going to be a press release saying, okay, we're going to pay back the gap, whatever.
Right.
It's a very, very complicated and unprecedented situation that we're in.
So how are you thinking then about this market? We head into a weekend. We've talked about Iran. This idea of stuck. I mean, what unsticks the market, for lack of a better phrase?
We have NVIDIA
Is it
earnings.
Oh, okay.
We have NVIDIA earnings coming up.
Yeah.
And we've been talking to people, and our theory was that, if they kick it out, that this could really be the catalyst. But we've been talking to traders, and they're saying not really, that actually the bias is toward the downside, that, they'll report strong numbers.
Yeah.
Jensen Huang will, come out with a swinging outlook, and it still won't necessarily drive things forward. And the last two earnings days they've had, the stock has fallen, even though they haven't exactly disappointed. So what the next catalyst is to really drive things is hard to know, because really what we are dealing with is a market, and we've talked about this, we're dealing with a market that for 3 years rallied hard, and the idea that it's taking a 1 quarter breather isn't necessarily out of line.
Is it significant, just quickly to wrap up? I mean, the S&P is on track for almost a 1% gain this week after how many weeks couple of weeks of being down? Is that significant or nah?
Well, we would want to see more of.
Okay.
It's good that it's up after 2 down weeks, but we would want to see a more convincing move. That was what I really thought was going to happen today.
Yeah.
When I was thinking that SCOTUS coming through and killing the tariffs would be the galvanizer, and it wasn't. So now we wait.
All right, we're going to leave it there. Eric Weiner, thank you so much. Really appreciate it. Bloomberg News Senior Editor of Equities Americas, Eric Weiner, joining us here in studio. All right, back to the markets we go, and another update. Let's toss things back over to Nora Melinda. Hey, Nora.
Hey, Carol. We check markets for you all day long here at Bloomberg. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We have U.S. stocks rising after President Donald Trump pledged to defend his tariff program after the U.S. Supreme Court struck down his global tariffs. We see the S&P 500 currently up about 0.6%. The NASDAQ Composite Index higher by 0.7%, and that blue chip Dow Jones Industrial Average higher by 0.4%. Looking at the volatility in the market, we see that the VIX index is just above that 19 handle. Taking a look at the yield on the benchmark 10-year Treasury, just below 4.1%. The policy-sensitive 2-year Treasury yield at roughly 3.5%. Taking a look at oil, we see it lower by about 0.1%. Taking a look at right there, specifically West Texas Intermediate crude. We do see that the Bloomberg Dollar Spot Index is also lower by about 0.2%. And looking at some of the individual movers, we see Select Medical, ticker SEM on the ticker, dropping after the healthcare facilities company reported adjusted EPS that fell short of Wall Street's estimates. And Live Nation shares climbing after reporting revenue for the fourth quarter that beat the average analyst estimate. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. Carol Masser, along with Emily Graffeo, in for Tim on this Friday. Super, super busy Friday. And there's one story that I gotta say continues to captivate the Bloomberg world.
Yes, one of the most read stories on the Bloomberg. We're talking about Blue Owl Capital, the shares tumbling for a second day. So this is a publicly traded stock, but they're a private credit company.
Right.
And it's a good way to kind of see how is private credit doing. You look at shares of Blue Owl, down about 11% in the past 2 days. And it's dragging these fears about private credit and some of the illiquidity in that asset class to the forefront. Again, covering the story from top to bottom, one of my colleagues, Olivia Fishlow, she's Bloomberg News leveraged finance reporter with us from the Bloomberg News San Francisco News Bureau. Thanks for joining us today. So just let's zoom out. Remind us what is going on at Blue Owl. why is this the most read story on the terminal? Why do people actually care about what's going on today?
Definitely, yeah. I actually think, Emily, you made the point really well when you said, yes, this is private credit, right? It's typically private, it's opaque, there's not really a window into the asset class. But these managers do have funds that trade publicly where they pool together private credit loans. And that's where we're really able to understand, what is going on under the hood? What assets do they have, and how are investors kind of treating and feeling about private credit? And in this case specifically, we saw a fund that Blue Owl has been trying to figure out what to do with for a while now. And the solution that they settled on was to sell their own assets in order to create liquidity to pay back investors in this fund.
Why did they want to pay back the investors? Talk to us about that, because again, this is a fund, it's not like a ETF or a mutual fund that people can just get out, but they were meeting redemptions here, if I have that right. Why did they need to meet those redemptions? Why did people want to get out?
Definitely. So I think there's two things here. One is that this fund it's a very specific vehicle. It's actually the last type of this vehicle that Blue Owl still owns, and it's a fund that was always meant to, at some point, return capital to investors. So there's sort of a timeline here for Blue Owl, and we saw that last year. In order to achieve this goal, what they tried to do was merge this fund with another publicly traded vehicle. But doing that would have forced investors in the non-traded vehicle to take losses that could have been around 20%. So Blue Owl eventually scrapped that merger. But now they're still left with, okay, we have this fund. How are we going to return money back to investors? And you are very right that before even the merger was announced, investors in this fund were already trying to take capital out, and redemption requests had exceeded 5%, which is the typical limit that funds have. So it had already gone to 6%. And to answer the question of, well, why were investors trying to get out? I think we're at a point where we're now seeing a lot of concerns around private credit broadly, right? There's a lot of different types of investments that they've gone very heavily into, such as software, that maybe the market is now feeling a little bit less sure about. And I think that's partly one of the reasons that we've seen investors start to maybe look for the exit here.
Yeah, it's interesting you say about software. Where did I see the story about buyout firms are on the brink of a software reckoning, having failed to spot signs that technologies like AI would upend one of private equity's favorite sectors. That's according to one of Apollo Global Management's top executives. So, there's the exposure there. There's a lot of money in private credit. We've been talking about it ad nauseum for the last few years, and investors have been, looking to get exposure to it. Put this in perspective. Is this the canary in the private credit coal mine, or is this just one fund that's gotten into trouble as we start to peel back the layers, or do we not know yet?
I think it's, it is a tough question, but I think it's definitely, look, there's a reason that this is getting so much attention now. And I think we've seen for the past few years private credit very aggressively push into retail. I've seen ads on the TV right. about private credit, right? So I think that as the environment is starting to turn, and now, maybe there are some questions around the asset class, I do think that this is a moment that shouldn't be glossed over. But I think also at the same time, there was demand for these assets. People bought them. There's still a lot of demand for private credit. So right. I think, maybe time will tell, but I think at the end of the day, it's something that retail investors should be watching closely.
And just 20 seconds to wrap up. Is that the takeaway, Olivia, here, that, okay, there are some concerns, get it, and we're getting some, a little bit more disclosure, if you will, on funds that are very transparent, because they've figured out a way to deal with this situation that maybe it's a blueprint for other, private credit firms? Is that the takeaway, or we're still not even sure about that?
It's a good question. I do think, last week we did report that these funds, which are the most transparent vehicles, they have to report, their loans, that they've actually categorized the same investments differently across different managers, and even the same manager had the same loans classified differently in the same funds. So I do think it is fair to, question the transparency around some of these vehicles.
All right, we're going to leave it there. Thank you so much. Olivia Fishlow, sounds like you guys have been talking about this a lot in the newsroom. And as we've said, it's been a story throughout the week that has been among the most read on the Bloomberg terminal. Olivia, thank you so much. Really appreciate it. She's Bloomberg News Leverage Finance reporter. Safe to say private credit definitely on Wall Street's mind, but so too, I feel like is anything and everything with artificial intelligence, whether it's the AI scare or AI opportunities.
Well, it's kind of connected because as Olivia was mentioning, that story they did about software risks in private credit, it's people are concerned about software because it's vulnerable to AI disruption.
Yeah, exactly.
And there's so much money in credit that's now being funded for, AI data centers. And
right, like the credit picture overall. We want to turn to somebody who is definitely involved in the AI space. We're talking about NICE. It's a publicly traded $7.1 billion market cap company. The ADRs trade in the United States. They're up about 2% year to date. They've jumped 21% in the past 2 days. Yesterday, the company was out with the earnings, fourth quarter results beating expectations. They did show strength with AI-related annual recurring revenue, known as ARR. And just today, I should point out, RBC Capital maintaining its outperform rating on NICE, lowering the price target, though, on the share from 175 to 150. So let's see and hear a little bit more about this company. Beth Gaspich is Chief Financial Officer of NICE, and she joins us from Hoboken, New Jersey. Beth, good to have you here with Emily and myself. You're not a household name, forgive me, although we like to talk to companies that are not necessarily ones we talk about every day. You play in the AI space. I see a lot come up about consumer service applications, customer experiences. Tell us exactly what you do and who are your big customers.
Yeah, of course. Well, thank you for having us, and we're excited to be on today. I think at NICE, we're an AI native platform for enterprise customer engagement and customer experience that you talk about. Our platform is unified, open native cloud, and we're unifying voice, digital, and self-service AI capabilities, all with specialization for customer experience, driving measurable ROI. That's a little bit about how who we are. We are a global company. We have over 25,000 customers. We have very well-known names of our customer base that are multinational organizations. We have Lufthansa, we have Allianz, Toyota, Bosch, many names that you would have well recognition of that do visits with us.
So Carol and I were just talking about how software is kind of becoming a dirty word on Wall Street because of its vulnerabilities to AI disruption. How do you explain to your investors that you're not a software company, you're an AI-focused company?
So we are very much an AI-focused and AI-first company, and I think you can see that really demonstrated in our results. We are a software company, but we are leaning into AI. We recently acquired as well a leader in agentic AI, a company known as Cognigy that we just finished acquiring in September of last year. And really, we're using those capabilities to provide a best-in-class single pane of glass or digital front door between enterprises and the consumer. It really allows for a seamless and much better enhanced experience for the enterprise with the consumer. And it's doing that because of all of the unification that we have, the capabilities that we get within the self-service AI combined with those digital channels that we have, and finally the human agent where needed as well. I think the proof really comes out in our results. We have seen a nice uptick in our valuation, as you highlighted in just the last 2 days, and that's on the back of really strong growth, with AI up 66% year over year in our fourth quarter that we just reported, with $328 million as our AI ARR, and that represents now 13% of our cloud revenue. So when we look forward, we really see our AI as being the accelerant of our driver of our growth, and see that even more so as we look forward. When we look at how the interactions with our customer base are changing, more and more of those interactions are happening through the self-service AI capabilities that are embedded in our platform.
So then you sound pretty optimistic. And in terms of CapEx spend, have you seen any pullback in terms of your customers as they think about what they need, especially when it comes to the AI exposure? But I'm just curious, what are you seeing?
What we've seen is in the fourth quarter, we just actually closed our best record bookings of ACV Cloud, which was driven by that AI as a key driver. So we have not seen pullback. In fact, we are seeing just the opposite, that because we have this integrated platform that provides this real single pane of glass and that interaction and the importance of that between the enterprise and the consumer, that spend is really being focused. And of course, we are an expert in customer experience. We've been doing it for decades. And we have about 20 billion interactions that are going through our software. So we have an enormous amount of data enrichment as well in terms of being able to drive really strong resolution for customers when they're reaching out to our customers, those enterprises.
All right. Great to get some time with you, and I'm sure we'll be checking in with you over the year. Beth Gaspich, she's Chief Financial Officer of NICE, joining us right here on Bloomberg Business Week Daily. Hey, folks, we've got about 26 minutes to go until we wrap up the trade on this Friday and for the week overall. We're looking at a market with the S&P 500 up about 40 points, up 0.6%. NASDAQ 100 up 171 points, up about 0.7%. Those averages just off their best levels of this session. So I liked what, though, Eric Weiner said. We're kind of stuck. He expected more of a reaction.
But hey, stuck is better than falling.
Unless you're short.
It's 3:40 p.m. on Wall Street. From Bloomberg World Headquarters, I'm Nora Melinda. Stocks rising this afternoon. Let's head over to the First Word breaking news desk for today's afternoon call. Here's Jordan Fitzgerald.
Thanks, Nora. The main U.S. averages are in the green after the Supreme Court struck down IEEPA tariffs. The S&P cash is up 0.6%, with the Nasdaq up 0.7%. Taking a closer look at the Dow, we have Amazon, Procter & Gamble, and Verizon leading, with Walmart, Johnson & Johnson, and Chevron on the decliner side. Copart and Newmont holding losses after last night's results, with Live Nation shares in the green. And cyber stocks like CrowdStrike and Cloudflare dropped after Anthropic added security features to Claude. Bassett said 2026 tariff revenue will be unchanged, and Trump said he plans to impose a 10% global tariff in absence of the IEEPA fares. Gold and Bitcoin up with oil quiet, and no major earnings expected after the bell. My name is Jordan Fitzgerald. All yours, Nora.
Thanks, Jordan. To hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat.
Just drive, baby.
This is the drive to the close.
But we're going, we don't need roads.
On Bloomberg Radio.
All right, it's time now for the drive to the close. And great to have back with us on a day where there's been a lot of headlines, geopolitics, tariffs, uncertainty, markets kind of just brushing it off. We're joined now by Bloomberg opinion columnist Nir Kaser. He's founder of the asset management firm Unison Advisors, joining us from Providence, Rhode Island. I don't even know where we should start, Carol. I guess we'll toss to you a question here just about your reaction to the moves that we've seen with U.S. tariffs and just what it means for the U.S. economy going forward.
Hi, thanks for having me back. I have to say I'm not terribly surprised, but to explain that, I think I have to put it in sort of broader context. I think from the very beginning, there's been a question on these tariffs of who was gonna shoulder the burden, whether it was going to be exporters or U.S. companies or consumers. And I think markets have been very adamant since almost the beginning. I mean, there was that big freak out during the initial announcement last April. But then after that, I think markets have been very adamant that it was not going to be companies nor consumers, not in any capacity, but in any meaningful capacity. And the reason I say that is because markets have marched on since April, and valuations have held relatively constant or expanded on the stock side, so that speaks to the margins. And then on the consumer side, I think you've had the 10-year Treasury pretty anchored, the 2-year Treasury at around 3.5% for many, many months, and so that didn't speak to any inflationary pressures. And markets turned out to be right. If you look at margins for public companies, they've been they've trended higher, and they're expected to be higher, even higher this quarter than they were last April. So there's been no real margin contraction from the tariffs. And on the inflation side, we know that inflation continues to work its way to the 2% Fed target. So, against that backdrop, it just didn't seem like markets had any reason to change their minds no matter what happened. But especially considering the White House announcement today that they're going to carry on no matter what the Supreme Court says, effectively, then, I think even more so for the market to just say, carry on, nothing to see here.
Nir, what I was thinking, though, is this a market for opportunity? I mean, every market has opportunities, right? Like, no doubt about it. But I was just putting together, we do a thing with our TV colleagues where we look at some of the different, winners and losers in the marketplace. And my, outstanding, some of the top names in the S&P 500 is a company called Comfort Systems. Don't really talk about this company, but they do heating and ventilation. I know, but General Electric, and then there's Alphabet, because it looks like they may be looking to expand their market for AI chips. So there's a Wall Street Journal story. But it's just interesting how much we are talking often in the last week or so about names that aren't necessarily household names. So the churn, the rotation in the markets, are you seeing it? Are you seeing opportunities? What is the trade right now in your view?
I think there's two ways broadly to think about that. One is, I think there's a trade. I think this is going to sound funny, but the biggest trade, I think, is having risk on. It seems to me that since the election and for much of the past year, investors have been very skittish about risk for various reasons, by the way, all of which I think are legitimate. Concerns around policy, uncertainty around policy, tariffs, certainly. I mean, there's the geopolitics. There's tons to be worried about. And I think a lot of people have been scared to put on risk. And I think that's been a huge mistake, as we now know. But I think it will continue to be a mistake. It has been this year so far. And I think the fundamentals look good for the companies. I think the economic numbers look good. There's just no reason to feel like we're headed into some calamity. And again, that can change. But so I think the biggest trade for investors is to not shy away from risk. Beyond that, I think, yes, you can be a little bit discriminating about the kind of risk that you take. In particular, I think when you look at the cross-section of the U.S. market, you have a lot of companies on the smaller side that are high-quality companies that are trading at very reasonable valuations. And I think also you have individuals within the let's call it the non-Max 7 group, the 493, that are decent values as well, in some cases as high quality, but are not trading for the same multiples. So I would say in that order, the first order of business is to take risk, unless you can point to data that concerns you about the direction of the economy or the market, and I just don't see it currently. And then beyond that, maybe being a little bit more discriminating. Having said that, I would say that if you want to be discriminating, there's many more values outside the U.S. currently than there are in the U.S.
It's interesting that you went there, because there was a story on the Bloomberg today that got into kind of the Sell America trade. And it said foreign purchases of U.S. financial assets accelerated in 2025, led by demand for stocks and U.S. treasuries. This is data released by the Treasury Department. You've also written about some of this. I mean, is the point, Nir, that even if global investors want to back away from the U.S. market, I don't think I'm being vain about this, it's hard to. I mean, it's a very liquid market. It's very deep. It's the size. Like, is it hard for global investors to really back off?
I think it's almost impossible if we're thinking about this in a binary way. Be in the U.S., not be in the U.S. It's almost impossible to not be in the U.S. I also think it's hard to contemplate tilting away from the U.S. relative to the U.S.'s share of the global market cap in any meaningful sense of that word. So, for example, if we say the U.S.'s share of global market cap is in the low 60%, let's just say, I mean, it's fine to underweight the U.S. because valuations are more attractive overseas. But I think, if you dip well below, 50, 40, 30%, I just think it's very difficult to make that argument, given that the innovation is in the U.S., given, as I lay out in that column, the way that the future is playing out. The revenues favor the U.S. in terms of the share of global revenues. The margins are better in the U.S. That's going to result in higher free cash flow profits in the U.S. So it's just hard to bet against it. Having said that, in the short term, I think there's an argument to be made for trying to tilt portfolios in favor of lower valuation assets. And like I said, certainly those assets are in the overseas markets at the moment. But we do have to distinguish between the near term and, let's call it, or maybe even the medium term and the long term. In the medium term, I think valuations are important to look at. In the long term, it's going to be the fundamentals. And it's just hard to not like the U.S. on that basis at this moment.
In the last 30 seconds here, you're taking time to put risk on in equities. What about in credit? Are historical levels of tightness in credit spreads making you feel like it's time to add more risk in credit, particularly when you think of all the Blue Owl headlines?
I'm not really, it depends, I guess, if we're talking about private or public. In the public markets, yes, credit spreads are tight, but they're always tight when conditions are good, and conditions are good now. And in general, I don't fear the tight spreads in high quality investment grade corporates, let's just say. In high yield, I think it's a little bit more concerning because the spreads don't leave you a lot of margin of safety. But you can deal with that in size. In private credit, I would just avoid it altogether, to be honest, because without visibility into what's going on in private credit, where the spreads are, what the quality is, and in general, we know that the quality resembles high yield to begin with.
Yeah.
But without more information, I just wouldn't feel comfortable personally.
What a great countdown to the close. Nir, thank you so much. As always, have a great weekend. Nir Kaser, he's Bloomberg Opinion columnist, founder of the asset management firm Unison Advisors. Do not go anywhere. We're heading over to our TV colleagues shortly. Counting you down to the close.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we're just under 7 minutes to go until we wrap up the trade on this Friday for the day and for the holiday shortened trading week. Remember, it's only 4 days. It felt like 5.
Forget about that.
And then some. Carol Massar along with Emily Grafeo, who's been kind enough to join us on this Friday, in for Tim. A market that's kind of holding on to its gains, whether or not you think they're significant or not. We heard Eric Weiner saying it feels like the market's a little bit stuck, but kind of looks like we could be finishing just off our best levels of the session.
Yeah, reminding us of that idea that often we bring up during elections, that markets like uncertainty. You know how people always say that, like,
yeah,
oh, it's actually better because in an election, like if a whole party sweeps the entire government, then like you can have these crazy policies. So anyway, now that we're almost in the limbo of what's going to happen next with tariffs, people just keep buying stocks. And the S&P 500's up.
Yeah, and we're up for the week overall. So we're going to count you down to the close, take a look at some of the stocks actually that have been moving, some significant ones. In the meantime, not to give you something to be bummed about, but hey, just as the snow, because we've had a little bit of rain, the snow piles have kind of start to diminish in a big way, actually, in and around the New York metro area. There is a late weekend storm that could blanket parts of the eastern seaboard with snow with more than half a foot likely in New York, several inches across southern New England, and that's through Monday.
As much as 10 inches could fall on JFK. Of course, that's our New York airport, with 3 inches in Boston beginning Sunday. I'm not sure why JFK specifically is getting maybe more snow than Manhattan would.
They're talking about this wave of warm, moist air from the U.S. Gulf expected to collide with cold air sweeping south from Canada. So the resulting nor'easter, never fun, will be capable of producing gusty winds and coastal snow from Delaware to Cape Cod. And as you mentioned, maybe as much as 10 inches could fall. I heard someone talking that depending on this storm, as always is often the case, if it's just a little bit off one way, will determine obviously whether we get a lot or a little.
The snow just melted. This article truly has pointed out. I think I was just looking out my window last night and thinking to myself as I looked on the streets of Manhattan, oh my gosh, finally you can see the road.
It's a little crazy. I mean, the system approaches just as the last snow piles from January's record-setting storm begins to melt. Check this out, everybody. Since December 1st, Manhattan Central Park has seen more than 22 inches of snowfall. According to an NWS meteorologist in Upton, New York.
Listen,
okay.
I like the snow.
Yeah, no, I love the snow too.
It obviously snarls travel, which is terrible. But
yeah,
I kind of do. It feels like if you're in New York and it's the winter time, it should be snowing.
I feel like it's par for the course
exactly.
In terms of how this week's been going. Number one story, most read on the Bloomberg, continues to be the Supreme Court axing tariffs, and then the president coming out and responding with a new global rate. He plans to impose that flat 10% levy on foreign goods in the coming days.
And just below that, Blue Owl sold private loans to pension giants and its own insurer. So we were following that very closely. Those definitely the stories of not only the day, but the week.
It's really, it's fascinating. I think, we were anticipating, I feel like a while ago, maybe a Supreme Court decision on tariffs. Remember, we went through a couple of cycles and they decided to not rule on it, so it got pushed off into 2026. But it doesn't sound like that story's over yet because the president certainly has some plans. So we'll have to wait and see how that plays out. In the meantime, holding on, we're seeing a little bit of buying into the close here. S&P still up about 0.7 of a percentage point, and you've got the NASDAQ 100 up about 0.8%. I think we're on track for a gain in the S&P this week.
Yes. And what did you mention before? Bitcoin and gold are also rallying.
Yeah.
And silver in a big way. Surprisingly, oil is down, though.
I know.
It was at, I believe, a 6-month high just a little bit earlier, I think yesterday. Now oil in the red, but really keeping an eye on that space.
Right, concerns.
As we hear more about Iran in the next 10 to 15 days.
Gold futures up about 2.25%. Bitcoin also higher. All right, do not go anywhere. Emily and I heading over to our TV colleagues. The closing bell starts right now.
Closing bells, a full breakdown of all of today's action and a push ahead to next week starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Katie Greifeld, taking you through to that closing bell. It's a global simulcast. Carol Massar and Emily Grafeo join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube here on a big day, at least if you're into the Supreme Court, which I'm told is hot these days, Carol Massar. A big Supreme Court ruling against those Liberation Day tariffs. The market reaction relatively muted, at least indirect reaction to it.
Yeah, I'm kind of glad you went there. We talked with our own Eric Weiner, who tracks the markets for us here at Bloomberg, and he said the same thing. He felt like the market's stuck. He expected kind of more upside to equities coming off of that, and to him, it just speaks that there's just a lot of questions still out there, and investors just uncertainty over many things, and so not necessarily going all in on this.
Yeah, you can see that in what is actually up in the equity market and what's down. The Russell 2000, those economically sensitive stocks, that's actually finishing the day in the red, Katie.
Yeah, it's interesting. I mean, you take a look at a stock like Nike, actually finishing in the red, lower by about 0.2%, as Romaine Bostic, sitting next to me, knows well. Nike is very, very exposed to tariffs, and initially they spiked, finishing, though, as I mentioned, in the red. There's still obviously a lot of outstanding questions.
Yeah, I was going through this whole worksheet of like all the companies that are, have the biggest exposure to tariffs and to foreign sales. Obviously, you have automakers, you have, industrial companies like Caterpillar, obviously apparel companies like Nike and Lululemon. And when you look at the market reaction in most of them today, I think you get the sense that for a lot of investors, they feel like the worst had already been priced in. We get the closing bells here on this Friday. Remember, this was a shortened week here in the U.S. because of the President's Day holiday on Monday, so 4 straight days. And the net result is we're going to end in the green on the day, and it appears for the week as well. The Dow Jones Industrial Average is going to end out the day up by about 0.5%. The S&P 500 closing right around 69.09 and change, higher by about 48 points or 0.7%. The NASDAQ Composite adding 200 points or 0.9%. But the Russell 2000 getting left behind. It's going to drop by about 1 point. We'll call it unchanged on the day, but it is going to have red on the screen.
All right, so a little lower when it comes to those small caps. Back to the big caps I go, looking at the S&P 500, 334 names in that index actually higher today, Katie, 169 to the downside.
And you can see that that positive breath when you take a look at the sectors as measured by the circle. Look at all the green on the screen. In fact, your biggest gainer from a percentage basis was communication services today, higher by about 2.7%. A lot of that being driven by Alphabet. Consumer discretionary, though, real estate also leading gains here. In terms of what didn't quite perform, there's only 2 sectors that finished in the red today. Energy, down about 0.7%. Going to be very important to keep an eye on that, and of course on the energy markets as we watch the geopolitical situation over the weekend, and also healthcare down about 0.3%.
Yeah, that energy trade interesting, and feeling like some of the tensions may be backing off, which is surprising considering some of the headlines. All right, let's go to some of the individual gainers, if I may, and it's Fix, FIX is the ticker. Comfort Systems, number 1 gainer in the S&P 500, hitting an all-time high today, at least intraday. That stock up about 6.5% here in the session. It provides heating, ventilation, air conditioning system, installation, all that good stuff. Firm reported revenue for the 4th quarter that beat the average analyst estimate. Keep in mind, this is a stock that has been on a tear this year. It's up about 60%, so some more momentum to the upside in today's trade. Flip it on over to General Electric, finishing just off its best levels of the session. It too hit an all-time high in the session today, finishing the day with a gain of about 2.5%. Morgan Stanley initiating with a recommendation of overweight, citing the engine manufacturer's durable services growth, strong pricing power, and pristine balance sheet. The analyst there says Wall Street underestimates, I should say, long-term free cash flow with further upside from earnings revisions and multiple expansion. They've set a price target of $425 a share, stock closing at $343 and change. So some upside certainly on that one. Stock is up about 11% year to date. And then the number 1 gainer in the NASDAQ 100, we're talking about Alphabet, up about 4% here. And this one of the things that kind of stood out for me was a Wall Street Journal story that says that Google is exploring new ways to expand the market for its AI chips to better compete with NVIDIA. So the company increasing its financial support to a network of data center partners, including a potential $100 million investment in cloud computing startup FluidStack. But I think it's interesting as we get ready for NVIDIA's results.
Yeah, right? NVIDIA results was that next Wednesday, right? The 25th. So.
Yeah.
We'll have full coverage right on here on the close.
Yeah.
All right. Well, before then, let's take a look at the decliners. Blue Owl shares down 4%, down 10.4% on the week. Now, on Thursday, the alternative asset manager restricted withdrawals from one of its retail-focused private credit funds. So that alone sparking some fears here about just how much liquidity there is in this asset class. Of course, there's been a lot of scrutiny in recent weeks on private credit. Bloomberg also reporting last night that Blue Owl did find 4 buyers for a $1.4 billion portfolio of loans to help pay out investors. But the decline, the trade today really reflecting those broader fears that investors are having about illiquidity in private credit and potential losses. I do want to go to Walmart, though. We were talking just a few minutes ago about how a lot of these commerce, consumer-focused companies not moving much on the tariff news. I think Walmart is a good example. The stock in the red, but only down 1.5%. They did cut, they got a recommendation cut over at HSBC. The analyst there cutting the retailer to hold and saying that the company's 4th quarter results the other day were solid, but the outlook for 2026 is surprisingly weak given solid trends. Nevertheless, though, it wasn't a big move downward in Walmart, but keeping an eye on that. And then finally, CoreWeave shares down 8%. This stock did have its biggest intraday drop at one point, though, since November. It was down about 12%. Business Insider reporting that Blue Owl, yes, the same Blue Owl from just a minute ago, was unable to secure financing for a $4 billion data center project that will be occupied by CoreWeave.
Yeah.
So this speaks to a lot of the fears in the market about there's a lot of credit funding these data centers to power AI. Is this actually going to create real revenue here, or is it going to lead to losses?
Yeah, and just an honorable mention too. I just want to point out the drop that we saw in cybersecurity stocks today, including some of the names like Zscaler, Cloudflare, CrowdStrike, down about 8% here on the back of that release of this new Anthropic tool, apparently related to security features in its Claude AI model. We do need to check yields just real quickly here. Of course, higher on the day and higher on the week. The entire curve shifting up here. Your 2-year yield up about 2 basis points. Keep an eye on that. 3.5%, as we're just about 4 weeks away from the next Fed decision.
Yeah, I think it's fascinating that you went there, and I think it's important because I think going into Friday, we all thought we were going to be talking about the inflation print and the economic data this morning, the hot inflation print, weaker growth, but it certainly shifted to that U.S. Supreme Court ruling against the president's, what is a key part of his platform. I guess at this point, Katie, it now goes to what comes next from the president, the workaround that maybe he gets to do so that he can continue to impose tariffs. But I guess we have to wait and see here.
Right, yeah. A conversation that Romaine and I have been having on the close is what this means for the 2026 midterms. It's going to be really interesting. There was a great column from our own Sean Donnan about basically that this is secretly a gift to Trump. I don't know if many others would go as far, but he does point out that you take a look at the polling. A lot of the Americans polled weren't approving of how he was handling the economy. So from that sense, if he does have to retool, if this does help in terms of some of the affordability measures, that maybe that will be reflected in November.
Well, I am curious how it's going to be reflected in a State of the Union speech, like how this gets spun. Because when I saw the press conference, I thought we were going to get more of that pitch, although, it was more just emotion and grievance. But obviously, he's got some time to refine that message, a message that presumably will actually be written by his speechwriters.
And all the while, equity investors are just piling into stocks. The VIX is lower. So it does seem like, at least for the market right now.
What did you do with Tim Stenovic? Why is he off?
Who allowed
I forgot about him for a second there. Did you get rid of him finally, Carol?
No, I would never get rid of him.
Oh, okay.
He's too good to get rid of.
Yeah.
I'll also
Maybe he
be
knew
here
something
on Monday.
Other people on... No, I'm just kidding. I'm just kidding.
Wow.
Are you guys ready for the snow this weekend?
What snow?
There's a snowstorm coming.
There is.
A nor'easter.
Storm. You New Yorkers are just so...
JFK Airport might get up to 10 inches.
10 inches?
That's too many. It's too many. I'm getting out of here. I won't be here all of next week. I am psyched. I'm going to Colorado, though, so I'm chasing more snow, even though it's been snowing more on the East Coast than it is out west.
All right, kiddo. Well, safe
Never on
travels.
vacation, Katie. If there's another decision, I'm calling you.
No, please
2 in
don't.
the morning. How do you feel about the midterm elections, Katie Griffin?
Let me tell you.
She's not going to answer. She will not take your call. All right. Have a good, safe trip. Everybody have a great weekend and look forward to talking on Monday. That'll do it. Our cross-platform, we call it the closing bell. Katie and Romaine continuing on the close on TV, and Emily and I, of course, continuing on Bloomberg Business Week Daily right here on Bloomberg Radio. We will see you again, same time, same place, except for Katie on Monday.
And most people would step up for a neighbor going through a tough time. Most people around here help out friends and family when they need it. But the funny thing is, most of us won't look for help when we need it. Talk to someone if you're struggling with mental health, because most people out here really care. Find more information at loveyourmindtoday.org. That's loveyourmindtoday.org. Brought to you by the Huntsman Mental Health Institute and the Ad Council.
All right, everybody, we are back here on Bloomberg Business Week Daily. Carol Massar along with Emily Grafeo. Who knew, certainly when we kicked off on Friday this morning, that this week's big story of the week would come this morning when we saw the headline cross about the Supreme Court striking down President Trump's global tariffs, saying he exceeded his authority by invoking a federal emergency powers law to impose them. It's been quite a week, and we know that well, it might not necessarily be front and center, I don't know, in Wall Street Week. I know you were up on Bloomberg Television and talking about it. We, of course, welcome David Weston. He's the host of Wall Street Week, coming your way tonight at 6 p.m. on radio and television. David, I do want to ask you, though, about your thoughts about that decision. You've clerked for a Supreme Court justice. You're a lawyer. Your thoughts, as this comes down, it doesn't sound like it's over yet in terms of maybe some lower court rulings and so on.
This is the law. The law is never over.
It's never over.
Lawyers can keep this going forever.
But that's tricky. I think about that for investors and like trying to figure out when does this resolve.
Yeah, it's going to be a while because, as you know, ultimately the Supreme Court said that President Trump could not do what he did under the statute, IEPA, and then sent it all back down. Without really any hint about what they should do. They just said, okay, lower courts, you figure it out now. That's up to you.
Didn't touch the refunds.
No, didn't touch. That's the big issue is the
right.
refunds. Just sent it back down and said, you guys sort it out. So they'll have to go back. They'll have to have more pleadings. They'll have to have more argument, have a decision. I expect that'll ultimately come back up. So there's some uncertainty left out there.
Did we get any clarity about how the court thinks about the executive branch's power and authority?
Well, okay, this is my interpretation at least. I think we did get this clarity. It's a 6-3 decision, right? So it was not very close. And what we did learn was the Supreme Court thinks President Trump cannot do whatever he wants. There are some rules, and he has to abide by the rules. Because in large part, the government was arguing the president declares an emergency. It's up to him to determine whether there's an emergency, and that cannot be reviewed by any court.
Right.
And basically, the court said, no. We get to take a look at that. We'll look at the terms of the statute. Under the terms of the statute, you're not authorized to do that. And by the way, they even went further than that, if you read it, and said, and if you amended the statute, I'm not sure that would be constitutional. Because the Constitution says Congress gets to decide tariffs, not the president. You just can't delegate that. So I think we did get some clarity, at least in the sense of people were saying President Trump gets to do whatever he wants to do. We learned he doesn't get to do whatever he wants to do.
Fascinating day, to say the least. Hey, listen, I want to get into your edition of Wall Street Week. We caught you. I know Tim and I talked with you when you were coming back from a flight to Japan.
Yeah.
You do focus on that a lot because I feel like what's been going on in Japan in terms of what they had to deal with, their deflationary picture for so long, is a good lesson.
It is, and that was the driving force between going over there with Apollo, with Mark Rowan and his colleagues. But let me can I have a step back?
Please.
It's related to the IEPA decision.
Okay.
Because one of the things we talked with Mark a fair amount about was the $550 billion that Japan has promised to invest. And we had the announcement of, I think, $33 billion in the Ohio power station. Well, I think there are going to be questions now about all those trade deals that were done under threat of tariffs under IEPA now. If you're a foreign country, you say, well, wait a second, why do I have to do that anymore? Because you've told the president he can't do it. So there actually is a connection between what's going on with Japan and what is going on here. But the real reason we went over there is because Japan, lo and behold, they got inflation to come back. And for a long time, as you know, there was no inflation. And, they didn't need returns really on investments. And that's changed. It's over 3% now. And whether it's households or investors or companies are saying we need some returns. So Mark Rowan took his partners from Apollo Global Management over there to say there's real investment opportunities here now that we didn't have before. This is part of how Mark described the situation.
Holding on to your cash or leaving your money into JGBs for the past 30 years has been fine because there's been no inflation. In fact, there's been deflation. All of a sudden, you have closer to 3% inflation. You have interest rates up for the first time, and that savings is going to be deployed productively. And now some of it has to go toward retirement. They will want better solutions for retirement, but some of it is just going to keep up with purchase price and purchasing power. I think about what's happening in Japan, and in Japan, they're going through generational change, and it's generational change in corporate governance, it's in interest rates, it's in government policy. And in many ways, they are the first of the Western democracies to face real aging, retirement, and high levels of government debt. And what's happening here is totally different than people's expectation, because most people's expectation of Japan or business mindset of Japan is 30 years of stagnation. And that is so dynamic here today.
That is Mark Rowan from Apollo Global Management. And one of the things that we learned in going over there, that if you talk to the Japanese authorities, they say, we've been working on this for 10 years, going back to Prime Minister Abe. We were talking about reforms, remember? But there wasn't the impetus for it because we didn't have the inflation. Now we have the reforms in place and they're kicking in and they're really restructuring companies. They're really carving out things. They're kicking out management. They're redoing things. In fact, one of the things that's fascinating is a lot of companies are deciding to delist from the Tokyo Stock Exchange because they don't want to keep up with the reforms that have been imposed on them.
That's pretty wild, right? Yeah. So it takes them away from all of that. I just, the whole the story of Japan is just really kind of fascinating. But I also think about from Apollo's perspective, in terms of they're looking for investors.
Oh yeah, yeah. Well, but they have estimates are $7 trillion in capital sitting essentially under the mattress.
Right.
It's given to banks for zero or very, very low returns on their investment. That money now, a lot of it is up for grabs. And on the corporate side, people are looking for places to put it. And so, but Apollo, I mean, one of the companies we've talked to was a carve out from Panasonic Automotive, and they now own 80% of that. Private equity, they went in and bought it. But even Sony, they made a huge private credit loan to Sony to buy a big music catalog. So they're really restructuring. They're moving around the capital a lot, and that's where Apollo thinks it can play a role, as KKR does, as Blackstone. Right. It's not just Apollo.
And these are companies that you mentioned that are kind of what we would think of as blue chip companies.
Yeah, yeah.
It's something that Mark Rowan has really tried to grill into Wall Street, that they're lending to investment grade type companies.
Investment grade, you're absolutely right, of course, Emily. Investment grade is critical for him. He keeps saying, this private credit is investment grade. It's investment grade. It's important to him. But part of what you'd expect, we talked to the head of the Tokyo Stock Exchange, and he said, what this does is it allows a Panasonic to say, we're maybe not the best owner of that particular business. There may be a better owner, which turned out to be Apollo in the case of Panasonic Automotive. And this is a way to really get productivity up, which they need, of course, because they've got a demographic issue. As their population ages, they can't get that many more people into the workforce. So what they're saying is we have to invest in automation and AI and things to get productivity up, and so we have to redeploy the capital.
What struck you most about doing this story? And going over there.
When I first went to Japan, I was a young lawyer and had a big Japanese steel client, and it was back in the days of Meiji when it was all salaryman and it was all conservative and all big karetsus things. Yeah. It is so different now. It is so different because it used to be you got a job, you stayed in the job for your whole life, they took care of you, you didn't expect big raises. It's very different. In fact, again, the fellow from the Tokyo Stock Exchange said 1/3 of all the people taking jobs this year in corporations don't expect to be in that corporation a year from now.
Which is the exact opposite of how it used to be.
It's so different from what I knew in the 80s. It's really extraordinary.
Great stuff. Look forward to it. David, thank you so much. David Weston, the host of Bloomberg Wall Street Week on Bloomberg Television and Radio, coming your way tonight at 6 p.m. All right, still ahead, we're going to get to the story that keeps on giving, one that makes us wonder, will it be a book, a streaming series, a movie? We're going to talk about a deal that could shape Hollywood for the years to come. That's coming up next.
It's 4:21 p.m. here on Wall Street. We check markets for you all day long here at Bloomberg. I'm Nora Melinda. U.S. stocks rose to end the holiday-shortened week after President Donald Trump pledged to defend his tariff program after the U.S. Supreme Court struck down his global tariffs. Traders, though, deeming the rejection to be a potential stress on government finances that is unlikely to change the economy's course. Some redheads coming through on the Bloomberg terminal, Treasury Secretary Scott Bessent saying nothing has changed on revenue and trade deals. He thinks all trade partners will honor their deals and that tariff collection is closer to $130 billion, probably not $175 billion. The S&P 500 today ending up higher 0.7%, rising more than 1% on the week. We saw communication services and consumer discretionary, the best performing sectors in the S&P 500 today. Energy, the worst performing group. The Nasdaq Composite Index up 0.9%, gaining more than 1.5% on the week. And that Dow Jones Industrial Average higher by about 0.5 percentage point on Friday. Eco data out this morning showing the U.S. economy grew less than expected at the end of last year due to a record-long government shutdown, consumer spending, and trade. New home sales in the United States picked up at the end of the year as builders' liberal use of sales incentives and slightly lower financing costs encourage buyers. Taking a look at volatility in the market, hanging around that 19 handle. The yield on the benchmark 10-year Treasury just below 4.1%. The policy-sensitive 2-year Treasury yield at 3.5%. And taking a look at oil, we do see it at 66.39. That's West Texas Intermediate crude. Bitcoin also rising more than 1%, hanging around that $67,000 handle. Apple shares rising 1.5% on Friday following the Supreme Court's ruling against tariffs. According to Bloomberg Intelligence, Apple recognized around $3 billion in tariff charges over the past year. And lastly, Corning shares rising more than 7%. That's after UBS raised its price target to a street high to $160 from $125. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. Carol Massar along with Emily Grafeo here in our Bloomberg Interactive Brokers studio. Well, the story that keeps on giving. Paramount Skydance saying it has no statutory impediment in the United States for closing its proposed $77.9 billion acquisition of Warner Brothers Discovery after it cleared a key U.S. antitrust hurdle. With the legal and ongoing deal story, because it does feel like I just had to check the Bloomberg to see, am I missing anything? Because stuff seems to be ongoing. We bring in two key members of the Bloomberg team, Bloomberg Intelligence Senior Antitrust Litigation Analyst. She is Jennifer Rhee. She's here in our Bloomberg Interactive Brokers studio. And out there on the West Coast in our LA Bureau, Bloomberg News Senior Editor and Entertainment Team Leader, Chris Palmieri. Chris, hang on for a moment. I just want to start with you, Jen, because tell us about this ruling. We say it's a key U.S. antitrust hurdle. Walk us through it.
Yeah, I mean, it really is a key hurdle and very good for them for this shareholder vote. So when companies decide to merge, they have to file under the Hart-Scott-Rodino Act with the government. HSR is what it's called. We've all heard about it. And that starts a mandatory waiting period by which they can't close the deal. They need clearance from HSR in order to be free, at least in the U.S., to close the deal. And that happened really fast with this Paramount-Warner Brothers combination. And in my mind, a little bit surprisingly fast, to be honest. But the thing that Paramount hasn't said is that they aren't free to close the deal, given what happened in the U.S. They still need merger clearance from the U.K. and Europe and possibly other jurisdictions as well. And that's going to take a lot longer.
And of course, they still need Netflix, right?
They need an agreement.
They need an
That's right.
agreement. So, but what is this saying about how the regulators feel about the Netflix deal? If they stay with Netflix, how would the DOJ react, like in light of what we've learned now?
Well, let me start by saying what this says about what the DOJ thinks about the Paramount combination. Yeah. Because honestly, there's no way they investigated this at all.
Seriously.
This was so fast, given the way these processes usually work. The companies were supplied with what's called a second request, which is an investigation. It's questions, and they're looking for data and documents. These things usually take about 4 months to respond to. They did this in about 6 weeks. And that means they dumped a lot of documents fast on the Department of Justice. February 9th is when they finished it, and now they have approval 10 days later. There's no way the Department of Justice got through all those documents and did a real investigation. So we understand that they're perfectly happy with that combination. The Netflix side of it is what you asked about, I think will be a tougher road. Now, they've already filed HSR as well.
Right.
They received second requests in January, mid-January, so they're working on those now. And as I said, in normal circumstances, they take about 4 months to do. So they're in the middle of that now. At the end of that is when the Department of Justice then makes its move. It can either clear the deal as it did here, it can clear the deal with a remedy, which I think if it were to be cleared would be more likely,
right.
Or it could sue to block the deal.
God, million questions. I do want to point out that Netflix did respond to Paramount today, and here's what they said. Paramount Skydance continues to mislead stockholders and distract from the facts. This is from Netflix Chief Legal Officer David Hyman in a statement that was put out today. Goes on to say the facts are that routine HSR milestones do not signal DOJ approval, nor that any decision has been made. They have not secured approvals needed to close, and they are a long way from doing so. So, Jen,
that's a little disingenuous too.
So tell me why?
Because the DOJ HSR clearance is never an approval of a deal. The Department of Justice doesn't approve deals.
Just a hurdle,
It
right?
just steps out of the way. Now, what the law says is that HSR allows the DOJ to investigate and possibly try to block a deal. If they let that period lapse, they've decided to step out of the way and do nothing. But it's not an approval. But in the U.S., it does clear a deal to close. It only means that any time, even 10 years from now, the Department of Justice could still come back and try to break up the company, try to reverse what it did. We've seen that already with the FTC, with Instagram and WhatsApp, trying to force them to sell those companies.
All right. I'm just going to say, I know I'm not supposed to do this, but I'm kind of tired of this story. Just do the deal. But Chris Palmieri, you have been covering it, all the twists and turns. Bloomberg News senior editor and entertainment team leader. He's been out there listening to us. He's out in our LA bureau. Top of mind for you, because it just seems like we're going to get more back and forth. And there's at least a clock still ticking, that there's still more regulatory stuff to go here.
Oh, definitely a lot more regulatory stuff to go. And I should note, we broke the news just an hour or so ago that Netflix co-CEO Ted Sarandos sent a letter to Mike Lee, the Republican senator who's called the hearings this month on this deal. He was very sharply critical of director James Cameron, the most successful director in film history, Titanic, Avatar. He said James Cameron's got it all wrong. We're going to support theaters with this Warner Brothers deal. Cameron himself had been very critical of the mergers. So that was a big surprise. And it shows how vigorously, really, Netflix is pursuing this.
Well, so, I mean, so what are you expecting, Chris, as you kind of watch, you know, every day, every week, there's something here. Like, what do you think is the next shoe to drop here?
Well, we'll hear on Monday whether Paramount has upped its offer and able to come to a deal with Warner Brothers again that would require Netflix to then weigh in and match that offer. So a lot of drama just coming in a few days.
And Jen, is it fair to say, just going back to this antitrust hurdle for a second, that the DOJ fast-tracked their decision? And if so, why? Is it fair to say that maybe there was some political influence? Of course, we know that the Ellisons are very close with the Trump administration.
I think you can say it. I feel like for so long, everybody's been saying that there's been a relationship that maybe favored a deal.
Yes, and I completely agree with you. I think we can probably assume that. But when it's a hostile takeover, the timeline is faster. So it looks fast-tracked, but it is also because it's a hostile tender offer situation and not a standard merger. The timeline is faster, but what normally happens with the DOJ is that they always ask for more time beyond what they're statutorily given. And in this case, they were statutorily given 10 days after the companies complied, which was February 9th, and they went ahead and issued, I guess it's a decision by clearing HSR, where I had expected them to ask for more time, just simply to be able to get through the documents, to look at it, to even be able to save face to say we did a thorough investigation.
Chris, I want to get back to you in a moment, but Jen, I want to ask you, so that does Netflix have some ground to say, wait a minute, this wasn't a fair review? Like, is there another litigate, or no, they're not going to touch that?
You know, Netflix doesn't really. I mean, they can say that. There isn't very much that they can do.
Can shareholders come back?
Well, the only way to do anything about the HSR clearance, and it wouldn't be ripe yet, would be to try to go to court to block a closing. But they can't close, right, because they still need antitrust approvals in other jurisdictions. So if it gets to the point where they get these clearances, and there are consumers or state AGs, possibly,
Attorney
that have
generals,
issue with the way the investigations were undertaken in the U.S., they can go to court and they can ask a judge for a restraining order or a preliminary injunction to stop a closing.
Chris, come on back in, because I thought, silly me, Warner Brothers signed an agreement with Netflix to sell it, and the studio and the streaming business, $72 billion. So, I mean, that is still out there, right?
Oh, for sure. They're the only company that has a deal right now. But it's contingent on a few things. One is shareholder approval, which there's going to be a vote March 20th, and also regulatory approval. And either one of those things could go awry.
And what are you watching next for? Because there are a couple things coming in the next few days. Is that right?
A potential bidding war next week. We'll see. I mean, Paramount said, $30 all cash was where it was at for several months, and then said last week $31 maybe, and everyone sort of expects them to maybe even go higher if they're going to steal this away from Netflix. So that's what we're watching, and then what Netflix does in response.
Credit. Chris, there will be a lot of debt credit or whatever. But Chris, why is this so complicated? Is it really, I tease that this can really kind of set the future of Hollywood. I mean, this is going to be a big deal no matter which way it goes down. But why is it? Do both of these, Netflix and Paramount, really need this company?
I would argue no. They certainly acting like they do, but Warner Brothers has had sort of a tortured history of corporate ownership over the last 20 years or so. AOL, AT&T, the Discovery merger obviously didn't go very well because that's why it's for sale now. So it's amazing that everybody wants this asset, but it's Hollywood. Oscars, they've got 2 movies. Probably one of them is going to win Best Picture this year. So everyone wants a little part of that.
Price goes up because of the result.
Chris, what's the likelihood we would see Netflix upping its bid? Ted Sarandos, I think he was on CNBC a few days ago, kind of dodging the question of
he was on Bloomberg.
He was on Bloomberg too
this week. Yeah,
kind of dodging the question though. He doesn't want it. I get it. They're in a hostile takeover kind of situation, but. What's your insight?
I would say, no, he just doesn't want to give up his hand right now if he doesn't have to. But just given all of the the TV appearances, podcast appearances, letters taking on James Cameron, he certainly, by all indication, is all in for now.
Jen, saving 30 seconds for you as you kind of continue to watch this. What's top of mind for you, or what might next come in terms of legal issues?
Well, just to see what happens with this bidding war, to see who ends up with the deal. And then if it's Paramount, we're just going to be watching UK and Europe. If it's Netflix, we're going to watch what happens with the DOJ once they get through their investigation.
Is Europe likely to have more of a problem with one deal over another?
I think probably Netflix, just because Netflix is really big in a lot of the member countries.
All right, good stuff. Thank you both so much. Have a great weekend. Bloomberg Intelligence Senior Antitrust Litigation Analyst Jennifer Rhee, and of course, our own Chris Palmieri out there on the West Coast, Bloomberg News Senior Editor and Entertainment Team Leader. We're not done.
You're not done.
You know what else was big on the terminal this week? Among the most read? Anything and everything to do with Jeffrey Epstein. Our team all over those files. There's so much still to go through, but we're going to check in with Jason Leopold. He's been on this from the get-go.
Great reporting.
It's 4:40 p.m. here on Wall Street. We check markets for you all day long here at Bloomberg. I'm Nora Melinda. U.S. stocks climbed to end the holiday shortened week after President Donald Trump pledged to defend his tariff program after the United States Supreme Court struck down his global tariffs. Treasury Secretary Scott Bessent earlier saying nothing has changed on revenue and trade deals. He thinks all trade partners will honor their deals and that tariff collection is closer to $130 billion, probably not $175 billion. The S&P 500 ending the day up 0.7%, rising 1.1% on the week. Communication services and consumer discretionary, the best performing sectors in the S&P 500 Friday. Energy, the worst performing group. The NASDAQ Composite Index rising 0.9% on Friday, gaining 1.5% on the week. And that blue chip Dow Jones Industrial Average higher by 0.5% on Friday. Taking a look at the Russell 2000, lower by about 0.1% to end the week. And some eco data out this morning showing that the U.S. economy grew less than expected at the end of last year due to a record-long government shutdown, consumer spending, and trade. New home sales in the U.S. picked up at the end of the year as builders' liberal use of sales incentives and slightly lower financing costs encourage buyers. Taking a look at volatility in the market, we see the VIX index, Wall Street's fear gauge, hanging around 19 right now. And West Texas Intermediate crude oil, keeping an eye on that at 66.39. Bitcoin rising for the second day in a row, up about 1.3% to hang around that $67,000 handle. And Walmart shares declining 1.5% on Friday for a fourth straight day of declines. That's after HSBC cut its rating on the stock to hold from buy. Apple shares rising 1.5% on Friday after the Supreme Court's ruling against tariffs. According to Bloomberg Intelligence, Apple recognized around $3 billion in tariff charges over the past year. And lastly, biotech firm Grail, ticker GRAL, plunged more than 50% on Friday, its worst day on record. That's after its multi-cancer screening test failed to meet its primary endpoint of reducing combined stage 3 and 4 cancers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. So what a week on every front, you know that, including the ever-growing and intertwined web of people and emails and documents that often lead back to registered sex offender Jeffrey Epstein. We talked about some of it yesterday, about Andrew Mountbatten Windsor, what he has been dealing with, his 66th birthday, driven away from a police station. We've also seen kind of politicians, business leaders, members of academia, and now British royalty being swept up in the fallout from the Epstein files. Now, the surprise is one of our reporters actually writing this, that U.S. politics has, for the most part so far, been spared from a similar reckoning despite known ties to the disgraced financier. So we want to kind of just talk about the week that was. For more on that, we're so glad that we have back with us in studio Jason Leopold. He's Bloomberg News senior investigative reporter, author of the FOIA Files newsletter. Comes out every Friday. You can find it. Just subscribe on the Bloomberg terminal. Head to Bloomberg.com/newsletters. He also co-hosts, or not co-hosts, he hosts the podcast Disclosure. A lot. You do a lot.
Yes, juggling a lot of different things.
The week that was, and we also want to get into some other stuff, but I mean, how are you thinking about this week? And I know it's something Tim and I talked about yesterday, that there's still so much more to come.
There is a lot more, and I believe I did mention it yesterday, but you know, now you're seeing the sort of daily stories about who emailed with Epstein, who did business with Epstein, who moved his money. But I'm thinking about it that in the weeks to come, we're going to start to see the bigger stories where mosaics are going to be built around what it all means, you know, and how each piece connects to one another. You know, stories based on the documents about what happened after he was released from prison in 2008. So, because that's a gap, don't forget. I mean, the documents are filling in that timeline, that time frame, like what was happening, who was watching Epstein, what was taking place, you know, within the federal government. And so those pieces are being put together, and certainly that's what I'm currently doing. And, you know, more to be revealed on that front.
I feel like something that has really come into the public's mind with the release of these files is just how much is redacted. Some of it seeming a bit arbitrary. I think you had recently mentioned how in one file, like the JP of JP Morgan was redacted, but it said Morgan is very obvious. When you're digging through these files, are you still kind of getting that sense that a lot is still missing?
There is a lot missing. And not only is a lot missing because of the redactions, but the files are not complete. So, many of these documents relate to criminal investigative files, right? And those files would essentially show you, every detail, financial transaction, FBI agent report. But there is many missing pieces to it. So you're not getting the complete picture, but you're still able to get enough information out of it. As far as the redactions are concerned, I mean, that's still a big question, particularly for members of Congress, because they dictated to the Justice Department what could be withheld and what should be released. Now, the Justice Department did send a letter to Congress essentially explaining all of these redactions. But it still doesn't really make sense because you have names in certain places and the same names redacted elsewhere. So that's a battle that's going to continue. But I think there's still a lot more to come just on that front.
So is there anything about aliens in that? No, I only bring that up because there was another crazy story.
By the way, Carol, I got to say that, yes, you're talking about the story that Trump, announced last night on Truth Social, on his social media platform, where he has directed the Department of Defense to release all the files on alien life and unidentified flying objects. I don't mean to take over from you.
No, I have to say, are you kind of whoa, I can't wait, or what?
Finally. Okay, there's two reactions. One is
he's
really
up to everybody.
Right as we're sort of you start to see everything with Epstein, it's look over here. But honestly, no, I'm actually excited to read those files. I mean, if in fact they are the actual files that the Department of Defense has, on what they refer to as unidentified aerial phenomena, UAPs. I'll read that. I will read that.
Have you ever requested information from this?
Okay, so here's a fun fact. I have not requested information about UFOs. Requests for UFO type records is actually what the CIA that accounts for the most requests the CIA
that they get
FOIA office get and the Department of Defense. They get more requests for UFOs than anything on as it relates to FOIA.
But do they give up stuff?
They do give up stuff, and it's usually heavily redacted. I mean, so it kind of begs the question, what's there? What's behind the scenes? But it's, I think that may actually be kind of a fun read. But I worry that, where people are going to go with that. If it's look, there's something really exists.
Independence Day was right.
Yes.
No, sorry.
Yes.
Okay, so expecting big stories to come together, just bringing it back to some of this very important work that you're doing with the Epstein files. Anything that happened, and have there been any revelations in the last 24 hours that have come out in regards to this that have stuck out to you? I know you talked with Carol and Tim yesterday, but
I mean, I would say the two big revelations were yesterday, where Andrew, former Prince Andrew, Kathy Rumler,
of Goldman,
I mean, those are the pretty significant revelations. I mean, let's not forget that Les Wexner also was deposed, right? Billionaire, retail giant Les Wexner.
Yeah.
So his deposition and the details about it, that was pretty big. Still raises more questions. But as you can see, we're still in that phase of raises more questions.
Yeah, absolutely. But it was just kind of wild, just the amount of stuff that's been coming out and more specifics and a lot more relevant to, I think, about the Bloomberg audience in terms of people in finance or the business world and stuff. So always looking forward to it. So nice to have you here. Safe travels.
Thank you. Appreciate it. Thank you both.
Thanks, Jason.
Good to have you here. Jason Leopold, of course, senior investigative reporter, author of the FOIA Files newsletter. You can also check out his podcast. It's called Disclosure, so find it on the Bloomberg. All right, guys, that's going to do it right now. We're going to check into some of the stocks on the move and a quick check on markets. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, getting ready to wrap up on the Friday edition of Bloomberg Business Week Daily. Carol Masser along with Emily Graffeo. Just want to mention a story crossing the Bloomberg. This from the Wall Street Journal. A trade group representing Detroit's big three automakers expressed concern in a letter today to President Trump's top trade officials about the potential of new tariffs being imposed, as according to a person familiar with the matter. Again, coming from the Wall Street Journal, the American Automotive Policy Council, they represent GM, Ford, Jeep maker Stellantis, asked the White House to exclude from any new levies that might be imposed those vehicles and parts covered by tariffs that remain after the High Court's tariff decision that came earlier today. That letter was sent shortly after the court's ruling was handed down, according to the person familiar. So again, that coming from the Wall Street Journal. I'm assuming we're going to hear a lot about the decision from different industry groups, trade groups over the weekend.
Of course. I mean, I can't say this is all too surprising.
No.
That automakers would say, hey, wait a second, we just figured out tariffs and now there's more uncertainty, and you can't be stacking tariff upon tariff upon tariff. So,
well, and the president threatened something like 15 to 30% auto
just
tariffs.
on autos.
Yeah,
right.
So they're probably like, wait, what? Exactly. We just negotiated that. All right. Just a reminder of how we wrapped up the trading day. S&P 500 finished up about 47 points, up 0.7 percentage point. Nasdaq 100 a gain of about 0.9%, up 215 points. And Emily, just finishing those equity averages just off their best levels of the session today.
Again, markets are kind of shrugging off any geopolitical uncertainty, any tariff uncertainty right now, and just kind of chugging along, really.
It is kind of remarkable. A lot coming at investors. I'm Carol Masser along with Emily Graffeo. Let's get, though, to some stocks on the move this past week. It was a holiday-shortened trading week, just 4 days, but a lot came at investors. Bloomberg News equities reporter Jordan Fitzgerald, she is in our studio. Where shall we begin?
That's up to you. Dealer's choice.
Oh, okay. Genuine Parts.
Let's go with Genuine Parts then. Genuine Parts down about 20% this week. That's the worst week since October of 2024, and those shares closed at a May low today. Genuine Parts did report results this week, and that did include a plan to split off its industrial part business and its auto part business. Some analysts viewed that as a positive, some viewed that as a negative. The auto segment has struggled and underperformed the industrial, but the market really doesn't seem to enjoy this plan given how the stock has moved.
Yeah,
the Q4 EPS also did miss.
Yeah, that was a rough one for this week. And very specific in terms of fundamental reasons, right?
Yeah.
At least based on investors.
Okay, let's go to Omnicom. I feel like I should know what this company is, but
it's an
don't think I do.
Firm.
Okay.
Yeah, those shares were conversely up over 20% this week. That was the best week since 2020 for Omnicom. Came very close, about 1% shy of having its best week ever, and closed at a March high today. That company did report results on Wednesday. Fourth quarter revenue did beat, and the company initiated a $5 billion buyback program. UBS also said that the company has really strong momentum at the moment.
Yeah, that one, when the earnings came out, man, that stock just shot up.
Yeah, it's when, like you said, it doesn't really stick out to you. It flies a bit under the radar and just had this big blowout week.
I was amazed at some of the names that were moving this week that weren't necessarily household names. I said it a lot this week, but
usually I'm here on Friday and we talk about SanDisk and then SanDisk and then SanDisk again, and now we've got a little bit more diversity here.
Yeah, absolutely. All right, take us to Garmin. Ticker is GRMN. Tell us about the move this week.
Yes, Garmin, which is a consumer electronics maker, up 16% this week. That's the best since November 2024. Company also reported on Wednesday. This is a big earnings theme this week, and its full year pro forma EPS forecast really blew expectations out of the water. KeyBank also said it was a beat on the top and bottom line.
It's so interesting. Remember when Garmin was just like that thing that you kept in your car and the GPS? Nobody uses those anymore, right?
No, I honestly couldn't tell you a product that's not a GPS.
Yeah, okay. But so they have watches, right?
I guess. I don't know. They're big in marine. I know, like on the water in terms of navigation.
You still
and
need
stuff.
GPSs on boats, I guess.
That's right.
You totally
Carol's
need.
a big sailor.
It's. I mean, you can pull out the sextant and you can look at the compass, but it's really nice to have GPS.
I'm impressed.
All right, this is a story that I feel like you need to bring in.
Okay, yes. So finally, let's finish on Blue Owl. ticker OWL. It was a big week for this stock. What happened?
A hoot, one could say.
Oh my God, that's good.
Thank you.
We need that.
Down 12% this week. That's the worst since April of last year, and the stock closed at a 2023 low. And there's just all of this worry going on with private credit markets. Yesterday, Blue Owl decided to restrict withdrawals from one of its private credit funds, and this caused a huge sell-off amongst peers like Ares and Apollo and Blackstone. And today, it came out that the company would be unable to secure financing for a CoreWeave data center project, which is kind of adding on to these worries that investors have on this private credit name.
Yeah, that was a big blow to that company, and also was a big blow to CoreWeave's stock as well. That stock was down over 10% just on the day, and all speaks to that AI jitters that are going on in the markets, whether it's a data center or a private credit fund that invests in AI or data or software.
Yeah, and it may take some time, right? The AI scare trades until we kind of figure this out, because as everyone says, the invest, the spend, the build out, we're kind of early in.
Seems like the only constant is volatility.
Yes. Yeah, that makes a market, that's for sure. All right, we're going to leave it there. Jordan, thank you so much. For more conversations, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. That's going to do it for us. You survived.
I survived.